Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. I interviewed her a couple years ago about the Chinese banking system, the Chinese economy, commodities. I've actually learned a lot from her in the couple years I've known her. She's recommended books to me like Denny McMahon's China's Great Wall of Debt. She introduced me to other contacts in the hedge fund industry with China expertise. She is a hedge fund analyst, a chartered financial analyst, and a CPA. Emma Muhleman, thank you for joining me.
Thanks for having me. Good to be back.
Now, Emma, we were speaking in text messages the last couple of days, and you sent me a really interesting explanation of how China's shadow banking system is set up, how local government finance vehicles are involved, and how Evergrande helped get this started a number of years ago, a long time ago. So can you try to summarize this so my listeners who aren't hedge fund analysts or don't know a lot about China's shadow banking system can understand how real estate prices, government is so dependent on real estate, and Evergrande are involved in China's shadow banking system?
Sure. So I'm going to take this kind of from a really macro top-down point of view to get the big picture. So the Communist Party had they wanted to grow from being a low-income country to a middle-income country, and that's comprised of bringing people out of the farms and into the cities and urbanizing, building buildings and apartment complexes and shopping malls and what have you. So they undertook that mission they began to undertake it in the 90s. And in 1995, they created a law for local governments saying that they needed to balance their budgets. But then in 1998, they created another law that said the local governments were allowed to take the existing land that they had no development on it and sell it at the highest price they could get. And so with that new law, ever since 1998, local governments, and there's hundreds and hundreds of provinces in China that are kind of decentralized and managed at this level in terms of their funding, have relied on these sales of these land banks to developers like Evergrande. And Evergrande is huge, but there's also several other enormous developers that are not being talked about yet so much. But we can get into those details later, or I can continue down this path, which is kind of explaining how these incentives are misaligned, or were well aligned for a while and now have become misaligned. So the way it worked would be Evergrande would come to, say, a tier 2 or tier 3 city and say, hey, we'll build this, this beautiful high rise and shopping mall and get your city, moving, and you'll make money. We'll buy the land from you, and then we'll go to the local bank and they will issue WMPs for us. Or actually, Evergrande created its own unit that which is called the trust. That sold WMPs, and while they don't break out whose WMPs they're holding, it's highly likely that they're almost all Evergrande WMPs. WMPs, excuse me, I forgot to explain what that is a wealth management product. A wealth management product was presented to its buyers, which were largely retail investors in China, but also suppliers of Evergrande and other property developers in some institutions, some other trusts. They're presented as guaranteed bank paper. And so, the bank would say, hey, why would you keep your money sitting here earning 2% in the bank when you could earn 7% on this wonderful WMP? But in fact, a WMP is nothing of the sort. What it is technically is a pass-through note structured as units in this, blind pool. So, but if you want to put that in like US terms, it's like something like a hybrid between commercial paper and an ETF. So there's no bank guarantee. There's none of that. So the problem was that retail investors are led to believe that these WMPs are bank deposits and they're backed by the bank, but they're not. They're unsecured units in blind pools that can be invested in really anything the manager of the pool wants. So that was in coincidence, or how do you say this? Coordinating with with Evergrande, the WMPs were invested in Evergrande and other developers. Evergrande is not the only one to do this. that money was invested in real estate to build, cities that then the idea was you would have farmers move into them and work jobs and, move from low income to middle income. But that can only go on for so long, right? So, but with this WMP structure, if anybody came and said, "Hey, I want my money back," which they were supposed to be able to do, the bank would then just issue a new WMP to someone else and pay the person who's calling their WMP, pay them off. And you can do that so long as the system as a whole is growing and growing. So as long as more money is being invested, and less people are calling in and not saying, "I want my money back now," you can keep doing this. And as we've seen in other Ponzi schemes, they can go on for quite a long time. I mean, it can go on for over 20 years. And in this case, it has. What's now happening is the central government, with Xi Jinping and the common prosperity idea, is there's a problem with the unaffordability of homes. And so you've got the young population, the part of the population that's actually going to be contributing to GDP, which is shrinking very fast, which we can also talk about that later. They can't afford homes. And so in line with Xi's common prosperity objective, one of the points is to make homes more affordable, right? And that makes sense. But when that happens, that's where your growth in the real estate sector starts to collapse. And when that starts to collapse, the second people see, in citizens, suppliers to, steel suppliers, contractors, people see this happening and see prices getting cut, and they immediately go to those banks and say, "Hey, I want my money back." And that's when the Ponzi starts to unravel. And that's kind of what we're seeing now. And so yeah, that's kind of a overall higher level summary. I hope that I didn't jump into too many fancy words.
You have a bunch of videos that people can see on Twitter and social media. There's people outside protesting, and the developers for the last couple of years, there's been China banking system problems since at least 2015. In 2019, when we had Baoshan Bank, Bank of Jinzhou, and some of the other small, medium-sized Chinese banks, a lot of those private banks were nationalized back then. Mm-hmm. So there was weird types of bailouts. The average person, in fact, many financial professionals that I speak to don't even understand that this was happening in 2019, that the Chinese government was already trying to paper this over. But there's all these protests. And like you said, every time one of these developers, whether it's Evergrande, Fantasia, which is now in the news, they just defaulted, I think, on a $200 million bond payment. It doesn't seem that large.
260 million US dollars. I mean, it's pretty large.
The number is like 200 million, but I mean, China's economy, 30% of their GDP is also based on real estate and construction, right? And then there's, like you said earlier in the interview.
More. Perhaps even more than that, because there's a lot that's not on the balance sheets of these developers.
Yes, that's the headline number, but then there's all these other derivatives and other investments that are tied to higher real estate prices, like wealth management products. The former head of the Bank of China, I think in an op-ed in China Daily, he called wealth management products Ponzi schemes, which are one of the main things that are attached to China's shadow banking system. So Goldman Sachs put out a research note in the last week or so. They said that it's about $8 trillion in China's shadow banking system, talking about how a lot of the bad debt is local government finance vehicles. Do you think that they're underestimating that number?
I think it's in the trillions. I wouldn't venture to guess the exact whether it's 8 trillion or more or less. I think that's roughly around the right amount.
So you don't think it's like the 50 trillion credit number that Kyle Bass said? Because Kyle Bass said that the amount of bad credit in the Chinese banking system, real estate, is around $50 trillion now.
Just from the real estate or the entire banking system?
Well, the whole thing. I mean, a lot of it's tied to real estate, right? In construction.
Yeah, a lot is. So sure. I don't have the particular numbers, so I don't want to really opine on that. But yeah, I would think Kyle's number is more accurate.
So you also sent me, in explaining some of this, that you talked earlier about steel suppliers and other materials construction. It sounds like a lot of the assets that are involved in this with the shadow banking and construction, a lot of the assets are pledged as collateral. They're hypothecated, rehypothecated.
Yep.
There's a lot of different types of fraud going on.
A lot. So yeah, I mean, there's specific fancy names for each of these things, but for instance, another thing that might go into your WMP would be it's called a commercial acceptance bill, which is basically an IOU to suppliers. Like, okay, some contractor works on building my wall, a wall or glass or something in one of the buildings I'm working on. I'll pay you in 6 months after you've done the work. So that's unusual if you think in the United States, like you don't wait 6 months to get paid for your work, but there's these commercial acceptance bills, IOUs to suppliers. There's all kinds of contract liabilities and liability and payments. Just so like payments on demand that should be payable for inputs. So say steel from a steel supplier, you normally pay that up front, but instead they'd say, hey, we'll promise to pay you this in 6 months, and those end up in these local government financing vehicles and these WMPs, these trusts.
These local government finance vehicles, I read Denny McMahon's book on your recommendation a couple of years ago. I also interviewed him. It sounds like there's many trillions of bad debt in these local government finance vehicles. And these local governments, they were reliant on higher real estate prices. They had essentially farmland or land that wasn't generating any type of value. And then they went to the developers like Evergrande and others. They weren't supposed to be able to get loans, right? And then they came up with these scams, these LGFVs they're claiming the Chinese government will bail them out. But now these local government finance vehicles, they can't pay off a lot of the loans that they've used for real estate development.
Exactly. And so I think it was August of 2020 was like a big warning sign for people who were following this closely. Evergrande got what they call the magic paper, or they requested a government help from the Bank of Guangzhou, and the magic paper was a big fat denial. And so that was kind of a big warning sign for not only Evergrande, but other developers as well.
And Evergrande has been doing many different types of fraud to delay bankruptcy. I mean, I've talked with you, Kyle Bass, Jim Chanos has talked about this in the past, and Stevenson Yang of J Capital, many others. They've expected Evergrande to eventually fail. But for at least like the last handful of years, they've just been coming up with new types of fraud to delay that. They were doing this pre-sale scam. They were forcing employees to invest a lot of their salary, their paycheck into wealth management products. So all these different types of scams to delay the inevitable, basically.
Exactly. Yeah. And pre-sales are huge. There's, I think, 1.2 million citizens in China who have paid on pre-sales that are amounts to $6.4 billion US dollars worth of pre-sale money invested that have nothing to show for it right now. And that this is a number that I can see in the news. Who knows how much there might be beyond that. So yeah, I mean, and I wouldn't make the mistake of thinking that this is only Evergrande, and I'm not accusing anyone else. But what I'm saying is that this is a system problem. So how a lot of people would ask, is this the Lehman moment? No. So Lehman was the last domino to fall. There was way before Lehman, there was some hedge fund underneath Bear Stearns, not even Bear Stearns as a whole, but some hedge fund underneath it that went bankrupt. That was Evergrande. So Evergrande say that the paper number, reported number, 300 billion in liabilities or debt outstanding. With the next largest would be China or Country Garden Holdings. That's at 270 billions. Again, that's what's reported. That doesn't include these things called minority interests, which are really just a way of moving debt off the balance sheet through a JV structure. Because if you don't have if you have 49% ownership of it, then even though you are the one liable to pay all the debt, you could still not have it on your balance sheet. So that's another way you could call it financial fraud, accounting fraud. And then after Country Garden Holdings at 270 billion, you've got Vanke, which is another 250 billion. So these were big they're all roughly, I mean, almost as close in size on paper as Evergrande.
And then Fantasia's in the news too. But then if you look up the hashtag Fantasia on Twitter, there's tons of people now talking about documented fraud in not just Evergrande or Fantasia, but the other Chinese real estate developers, talking about all the different scams, all predicated on higher property values.
Yeah, and exactly. I mean, that's how these things work. So basically, when the local governments had to balance their own budgets and fund themselves, they would go out and, say the mayor, we'll call it the mayor of a certain province, would go out and say, get the citizens excited about these new developments and how they should invest alongside the city and get the banks involved. And they would be kind of like the promoter of a new development, say. And so when they have promoted, they've reached out to high net worth individuals, their contacts. Then when their contacts go to get their money back and they can't, those local government officials are on the line and they don't look very good. And that's kind of why they've been in bed with the real estate developers, including Evergrande.
The real estate developers were also bribing some of these politicians and bureaucrats, right? There was financial incentives, whether it was the treasury, the local government's budget, with higher property taxes, the amount of capital gains they can make rezoning the land. But there's also bribes and coercion, right? Financial incentives for these politicians and bureaucrats to promote regular Chinese people going and buying new condos or a single family home from these developers, like the pre-sale scam.
Of course, yeah. And this is characteristic of kind of like all business, the way it's done and things are done in China.
Well, yeah, my research has shown that a lot of these Chinese politicians and bureaucrats knew for years that Evergrande was doing a scam, and there was just the financial incentive for them not to blow the whistle on them.
Of course. I mean, and there's also a risk if they were to try to blow a whistle, when the orders come down from the central government saying, you need to balance your budget, you're allowed to sell this land, and you better balance your budget, then that's what you better do. If you don't do that, it's not like they're all just greedy. It's when you have it's not like we have to look at this through a Leninist frame of view and not a capitalist frame of view. When the central guy, in this case, she says, balance your budget, you figure out a way to balance your budget. So they've done tons of different things to plug holes just so that they can, report back to the leading guy and tell him what he wants to hear, right? Growth, I need growth to be 7%. Okay, how are we going to make this happen? Evergrande, let's build another theme park that that's going to be empty. And who can I get to put money forward up front for this? And how am I going to get that done? I mean, there's risk, I wouldn't want to be a local government official because, you're damned if you do and you're damned if you don't.
Yep. And that's a problem with these Soviet Union politicians and bureaucrats and Chinese Communist Party politicians and bureaucrats. If you're not at the top and you are making money or you are successful for a while, the people that are at the top that are above you can just decide that you're the scapegoat.
Exactly. And that's what I was getting at earlier when I mentioned, that official who was promoting this stuff doesn't look so good, when things hit the fan.
Well, look at the corruption scandal, right? She was doing this marketing campaign, right, about how he was cleaning up corruption while he was becoming a billionaire. So he was like taking out all the guys under him and all his political opponents.
Well, it always, with these anti-corruption campaigns, it always means we're clamping down on that farm, those people who are corrupt, but not our group, well, he was doing his anti-corruption campaign, like one of them, like his head guy's son wraps his car around he wraps his like super expensive fancy car into a tree, probably on alcohol or whatever. I mean, it's not really a clampdown on actual corruption. It's a clampdown on Xi and the Politburo's, non-friends, they're enemies.
So I want to ask you about Chinese banks and HSBC, because a lot of these articles about Evergrande and Fantasia, they only briefly touch on Chinese banks exposure. Is everyone just assuming that the People's Bank of China, the Chinese Communist Party, are going to do unlimited bailouts or quantitative easing or some type of bailout games, maybe move all the bad loans into a new bank that they set up, print the money and stuff it in there, similar to the 1980s SNL scandal here in the United States? Are they going to do something similar to that? Is that why we're not seeing a lot of mention of specific loans out from Chinese banks to all these real estate developers?
I don't think that that's the case. So, like what I mentioned earlier was the 3 red lines policy that came in 2020, or it came before that, but where it actually came. China, the PBOC met with the CBIRC and said, we're going to, and kind of talked to all the banks and said, we need to cool this real estate boom. And so told the banks to start systematically stop loaning more money to developers. And so I think, Evergrande's got to have an idea that, I mean, that's why we are where we are now. People will say, well, why now? Well, that's why now, because the banks are not as friendly to Evergrande as they had been previously. And so the Ponzi is starting to fall apart.
But the banks helped fuel this Ponzi scheme, because if you read Denny McMahon's book, for our listeners who haven't read it, there's stories in there going back, 7, 8, 10 years of factory.
Yeah, so I'm talking recently in the last few months. So since August 2020, there's been less of that, and especially I think now actually they've gone now because she has seen what a mess he's made, or whoever you want to attribute it to, but we all know who the big boss is she. Now they've changed that role, and now they're telling the banks, in this specifically also the local governments. Again, here we go again. It's kind of like the Fed and how they go, we're going to taper a little bit. Oh crap! Whoops! Now let's go the opposite. It's exactly what's happening here. They told the banks there's these 3 red lines, which reflected too much debt, and there's specific ratios, what have you. And anything past that, you don't loan money to developers. And then now everything's falling apart. Oh no, we've got to fix this. And so now the PBOC is encouraging the banks and the local governments to help the property developers again. That's the latest.
There's like mainstream global macro hedge fund managers on there saying the PBOC and China, the Chinese banks, are going to curb all the leverage ratios. But to me, Emma, it seems like it's way too late. I mean,
it's way too late.
We've been talking for the last 15 or 20 minutes about all the different types of fraud and Ponzi finance, and everything's predicated on higher real estate prices. The local governments are doing all types of crazy financing schemes. The real estate developers are doing it too. And then from the top down, they're ordered to stop that. So you can't just stop a Ponzi scheme like that without everything
exactly. You can't. It doesn't work in reverse. You can't unroll a Ponzi the way it can roll up. So I mean, the total amount invested in WMPs is in the trillions of dollars, and it's used to finance hundreds of major developers and thousands of projects in China, and the entire edifice is collapsing. And Evergrande is looking like it's headed for bankruptcy, and just that alone is a multi-billion-dollar fiasco. Evergrande losses arise in WMPs, corporate debt. Well, corporate debt losses, you'll see unpaid contractor bills, equity markets, unfinished housing projects. These are all going to be problems. But here's the one thing that I find that might be different. And this is somewhat speculation, but it's also based on the language from Chinese officials. It sounds to me like because they finally realized how big this is, the way that they plan to deal with the social unrest. There's been some riots at banks lately, and you've heard about it outside of Evergrande. Well, the authorities sounds like this time going to start just quickly arresting people and making them disappear. I mean, and China's really good at making people disappear. So I might have a quote for you. So it's from this: local governments have been ordered to assemble groups of accountants and legal experts to examine the finances around Evergrande's operations in their respective regions, talk to local, state-owned, and private property developers to prepare takeover local real estate projects. Here's the key part: and set up law enforcement teams to monitor public anger and so-called, quote, mass incidents, which is a euphemism for protests.
Well,
according to people.
It's not just the real estate prices falling in China, Emma. There's tons of videos, and this has been happening since November 2020 and only getting worse. You have these electricity shortages. You have really bad stagflation in China.
This is a huge problem. The electricity shortages is a huge problem. And I actually just spent some time going through the figures for what China is having to deal with here. China doesn't have, all China has is coal internally. And they know they still have to import a bunch. Coal prices are up 300% since the start of the year. Oil, China has to import a ton of oil. That's up 65%. Natural gas is up 300%. So that's also tripled like coal. Aluminum up roughly 50%. Copper 65%. I mean, the list goes on. And these are all things that China relies on dollars.
And the utilities are state run. They can't raise their prices.
So here's what the state's doing. So what the CCP has been doing now is directing the electricity, so first we must announce or talk about the fact that in China, they subsidize the commercial industry. So they subsidize steel makers and, a bunch of different contractors that then end up supplying real estate developers. They subsidize their electricity so that they can kind of for instance, dump steel into the United States at cheaper prices. So that the CCP controls who gets the electricity. And right now, since they're having such a shortage, a huge, like an extreme shortage of energy, and we're coming into a cold and could be brutal winter, and especially in the northern regions, the CCP has now it's forced to direct energy to the residential sector. And so where are they taking it from? They're reallocating it away from the commercial industries. So you've seen they've shut down a large share of the steel industry. And, obviously that's not helpful for growing this real estate sector. And they've shut down a lot of factories that supply even U.S. companies. So it's a big problem. And over 50% of electricity in China comes from coal. So with that price up from 69 on January 1 to today, it's at 274. It's up 300%. So while China leads this adoption and production of electric vehicles, the whole edifice relies on an electric grid built entirely on coal, which is the dirtiest form of energy. So that's also another thing that Xi is being forced to reckon with, because as he tries to play Mr. Clean Energy on a global stage, he's starting to get called out.
Well, that's a false narrative. I mean, it's so hypocritical.
I know.
It's ridiculous. I mean,
it's
if you read articles or watch videos of rare earth mining in China, the air, water, soil, all around the mine is totally destroyed. It's toxic for a very long time.
Mm-hmm. So I think that China's trying to get some deals together to get natural gas from the Middle East, and is trying to work with Russia to get some, but even still, it's not enough. It's just not enough. So, I mean, they're being forced to, shut down factories to divert that electricity resources to residences, because you can't have people freezing to death.
So you expect supply chain problems and shortages to continue, not just for say 6 months or 12 months. It could be years then.
I think that's in terms of supply chain shortages, I would think it'd be a year or two. And I think this whole property development fallout is not going to be, a Lehman moment type of thing that happens overnight. It's going to be more like a slow and a horrible burn over more like a period of 12 to 18 months, maybe 2 years.
Well, aren't the banks going to be the next shoe to drop, some of these Chinese banks and the amount of bailouts, or HSBC Bank, which is not a Chinese state-owned enterprise bank? So they're not going to get a bailout from the People's Bank of China, China Central Bank. So don't you think some of these banks then, because this is what happened in the US in 2008, right? So you had all these home developers that all had subprime housing. They were all playing games. They were subprime mortgages, but then the banks were the second shoe to drop after the home developers and Countrywide.
Mm-hmm. So that's the way it happened in the US, but the US does things a lot differently than China. So whether little banks dropping, sure. HSBC, they're on their own. I mean, I don't think that she is going to be looking out for HSBC. So I don't know what other banks globally. I know this isn't going to be contained in China. That's
well, doesn't
so when people
BlackRock bought a lot of Evergrande bonds, right?
yeah. I mean, this is, and that, if you ask me, I mean, I can't say anything with certainty, but if you ask me, I don't think that was just for purely capitalist purposes. I think that there was something more behind why BlackRock did that, right? I mean, I'll leave your listeners to speculate themselves, but
well, probably a bunch of different reasons. Yeah, they're the Davos crowd, and probably also like bribes or other stuff. Because like a lot of people on Wall Street, a lot of bankers on Wall Street, higher ups are in bed with the Chinese Communist Party. Kyle Bass and you have talked about this on Twitter a lot.
Mm-hmm. And yeah, and if you want to do what BlackRock just did and start up your own wealth management business in China, that's the only foreign wealth management enterprise supposedly that's going to be there to service the 1.4 billion Chinese people. You got to do some things you got to do some favors for communist leadership, and maybe that means buying bad things that aren't going to be repaid. And there's a bunch of Americans that are invested in these things don't even have a clue that they're exposed, whether it's through Bloomberg Barclays, funds tracking the Bloomberg Barclays Global Ag Bond Index, which also did this switch face and like quadrupled the allocation to China when China needed it most. So such that all the funds, and there were trillions of dollars in funds that were tracking that index, had to reallocate and put money into China. MSCI did the same thing. FTSE, same thing. And then you've got the BlackRocks of the world with the funds following these indexes, and that's actually been the primary thing that's, I think, helped China prevent falling into this position.
Some of these emerging market stock indexes and bond fund indexes, they're up to like 40% allocation in China, but China's not really an emerging market anymore. So obviously there's some type of incentive behind the scene to get that type of allocation.
It's too funny because China's both an emerging market and not an emerging market. So if in certain indices it's an emerging market, it also convinces BlackRock to come out and say real recently, along with the announcement that the allocation to China should be 3 times higher than it currently is, which is insane. That was based upon, so the chief strategist at BlackRock based that on the fact that China is not an emerging market. So you've got BlackRock arguing we need to increase the allocation. Everybody else should be doing the same thing, because China is not an emerging market anymore. It's, a leading economy, this and that. And then you've got other indices, EM indices, that are advocating for China being in their included in their baskets, because it still is an emerging market. I mean, China is whatever can convince people to call it.
Do you have any concrete numbers on how much of HSBC's profits are allocated into the Chinese economy, Chinese real estate? Because I went back through their investors' presentation, some of their quarterly reports and annual reports. There's a lot of gobbledygook in there. So there's tons of presentations talking about how they're going to be one of the largest banks outside of a Chinese state-owned enterprise to have exposure in the Pearl River Delta for real estate loans, but then they don't put numbers on it. So I went back through 2015 presentations, 2016 presentations. I was trying to get some numbers from, 5-6 years ago when the real estate boom was still booming in China, trying to see if they were bragging about an actual number that like they have hundreds of billions in loans outstanding. I didn't see any of those numbers anywhere.
Mm-hmm. So I'm seeing 17 billion US dollars for HSBC. And this is according to JP Morgan.
Yeah, I don't think that's a real number.
Come on, that's like nothing. So here's the thing. HSBC is corrupt. It's long been corrupt. Every time they face the Senate in the US, because they still have, bank locations here, because they've been involved in the terrorist finance, all kinds of things. Every time those things get called to task, they have a new CEO that sits there and goes, I wasn't here when this happened, so I'm trying to fix it. I mean, HSBC is not exactly and above. I mean, I think it's kind of a corrupt entity as a whole.
I think it's one of the most corrupt banks. There's
so
an entire documentary episode on dirty money on Netflix for it.
Exactly. So let Netflix say it instead of me.
Okay, as we wrap up the interview, I have one more question for you. So we talked about energy problems in China. What do you think this does for commodities demand in China? Because it seems like it's going to create big distortions. I've seen videos on China in Focus and elsewhere, these YouTube channels that have first-person interviews with people in China talking about stagflation for workers demanding higher wages, higher food prices, energy and electricity prices in China are going through the roof. I saw a business owner at a factory talk about how his electricity costs went up over 10x because he was trying to get his own diesel generators working compared to what he would have paid for electricity off the grid. So do you see worse stagflation in China and a continued demand increase for energy, and then that's going to create maybe like problems for the rest of the world?
I do 100%. Yes. I mean, I think I think the fourth quarter is going to be the first wake up call. I mean, we've had wake up calls already. I would argue. I mean, look at the price to rent a U-Haul. Look at the price to ship a package. If you want to ship a package, anything faster than 5 days, USPS, you have to pay $80. It can be an envelope. It's $80. I mean, there's big shortages and big, and you've got ports all jammed up in China. There's the problem when everybody relies on China, and a lot of these companies are just now reorienting their supply chain so that they're not so reliant on China. And really, here's one thing that I want to make a point of. China is just more of a Lego, they put the Legos together. They're not really that critical in terms of, if I'm a company and I want to, reduce my reliance or get rid of it altogether on China, I can easily go to, Mexico to produce it. It may be a little more expensive, but not so prohibitively high. China's not coming up with the new technology. That's all coming from Japan, South Korea.
The U.S. The U.S. does the R&D and then exports it to China for assembly. Yeah,
exactly. And same with other countries. So, Samsung they come up with the cool designs and the great technology, and then the widgets are put together in Chinese factories with labor arbitrage. Well, that labor arbitrage is kind of gone, right? And if you look at the demographics in China, you're going to see in the next 10 years or so something that's never been seen in history. It's like 400 million people coming out of the prime age working force. So 200 million of that is due to aging. So they go into the 70s, 80s, 90s in their age. They're not productive workers at that point. Really, they have to be taken care of. And then you'll see some, 50 million, 100 million that are prime age workforce, giving them baths and taking care of them. I mean, that alone is going to be it's going to have a huge impact on the productivity coming out of China, Chinese GDP, and also the supply chains that rely on China. So the quicker companies can reorient their supply chains, bring that, that work or the labor back home, whether that's in Europe or whether that's in North America or Mexico, the better, because it's not looking good, but it's looking like stagflation, exactly as you say, because you're going to have higher prices driven by the supply side, so shortages and backlogs and problems on the supply side. But then you have on the demand side, you have debt problems, both in the West and in China. And so if you have, debt problems reducing demand, but prices going up, then you have a real stagflationary, lower growth, high inflation problem.
Yeah, the narrative for Chinese manufacturing, and maybe this was true for decades in the past, was that China was exporting quote unquote deflation. So that Chinese goods were cheaper, although I would argue that a lot of them were not as high quality and they did break. So people had to keep reordering. But for a lot of companies, that was their business model. They changed their business model. So the goods would break. They weren't high quality and people would have to keep reordering. But I do I have contacts in mainland China in manufacturing, and they tell me examples. And you listed the labor costs. The labor costs the last 15 or 20 years, they're up like 500%. So yeah, they started off cheap, but now the labor costs for factory workers are up a lot. But all these other input costs, look at electricity. If electricity costs are up 10x or more for factory owners, and they can't there are other input costs, so labor, electricity, all these other input costs.
And that's actually goes back to the point of where I was talking about in the development cycle for China. So they're kind of stuck in this middle income trap. It's easy to go from moving people from the cities or from the country to the cities and building some buildings and getting them, quote unquote, or making them quote unquote urban workers. But getting from middle income so middle income is $5,000 per person per year at the lower end, to $20,000 at the max. And then once you get to $20,000 per person per year, you're in the middle income. Going from that 20 to say high income or wealthier, which is, the US is very high at $70,000 per person per year or somewhere around there. There's a big gap there, but to make that transition, there's only been like 4 countries in history that's ever done it. And that was Japan, Germany. I can't even remember the other 2. And so it requires ingenuity. It requires having a market that's set up for people to be incentivized to take risks and try to build new products. Not stealing technology from others is actually in the long run detrimental to your growth, because then you build an economy that's based around where do I look to find the manual to copy? It's not a model has
sustainable.
a mind where, and the mindset of the people becomes, aligned with that, right? So that they don't think, oh, I'm going to go build that myself. I'll figure it out. They think, well, it'll be figured out somewhere else. Let me find it. It's just like cheating in school doesn't help you in the long run.
Well, you also have xenophobia now, where a lot of foreigners, they set up like joint ventures in China and then they were kicked out. So there's a ton of articles about this in the Wall Street Journal the last like 5 or 6 years. And it started before Trump put the tariffs on Chinese companies. But it seems like if you're an American business owner and you went to China, 15, 20 years ago, you had success. But the last like 5 or 6 years, once Xi came into power and started consolidating power, things changed. And this was before Trump put the tariffs on, but things have only gotten worse since then.
And I think even if you were a business owner that went 20 years ago, you are still having problems or have left now or getting ready to leave now. I don't think that they're getting any special treatment,
Yeah, I agree. They've left. Almost all of them, all my friends that made a lot of money in China that went I even knew someone that opened the first General Motors plant from Michigan, and he's gone.
Wow. Yeah. It's a really gnarly situation. I wouldn't want to be Xi right now. And it'll be really interesting to see how they try to, the one thing that I think that that could perhaps keep Xi in office and safe is if they just go with that plan that they hinted at, where they start, when there's unrest, they just start arresting people and they disappear. And then the problem's gone.
But then you're going to see companies move their factories, right? Because if there is stagflation, China's no longer the source of cheap labor, cheap manufacturing. You're going to see more companies move if China's manufacturing becomes unreliable and costs keep rising, you're going to see more and more factories leave them.
Yeah, that's going to happen regardless, in my opinion, because we've seen how the espionage that takes place, the unreliability of using China and relying on China as a supplier or even a intermediate parts, putting together intermediate parts. Nobody wants to rely on China anymore. So you're going to see China move more and more inward. And that's consistent with, a party that's has that Leninist view with full control is the main and only real priority, and keeping that few people in the Communist Party safe and in control. And so that's going to require an inward shift instead of, before it was China's going to be more like, the global, the globalist Xi. It's the opposite. It's more like the North Korea movement type of thing. But the one thing to think about here is there was this whole thing with Graham Allison with the book that he wrote, and this idea of the Thucydides trap, that if you have an established power, i.e. the United States, and a rising power, i.e. in this case, then the Graham Allison's idea was China, that, that is a pretense for kinetic warfare. Well, there's an article in Foreign Policy. It says something, the name of it says the problem is not that, the problem is not that China is a rising power. If you search, the problem is that China is a declining power, you'll find it. And what it talks about is actually when a country reaches, say, a rising country or a developing country reaches peak power, that's when it's most likely to do something like try to take Taiwan. Because if they go, if we wait a year and a half, then Taiwan will have picked up some more U.S. weapons, some more, fighter pilots, and more defense systems. We'll have no chance. And right now we're at our peak power. We're only going down from here. So while I think it would be incredibly stupid for Xi to move on Taiwan, it also seems like this would be the logical time to make that attack on the first island thing, which is part of their grand strategy. So it's feeling like things could get kinetic. I think it would be dumb again, and so I think there's I don't know. It just
do you really think Biden doesn't seem like the war type in terms of he's on the Chinese Communist Party payroll. Hunter Biden got a lot of money from the Chinese. So I don't see Joe Biden and his foreign policy administration being anti-China. Now, if Trump was still in office for another term, I think it would be different. But with Biden there, I don't think that's going to happen.
And Biden also is not he's more of seen as more of weak in terms of a military type of his foreign policy has been a complete disaster, if I'm going to be frank. I mean, look what happened with Afghanistan. We are like the laughing stock on the international stage. Everybody knows you get your civilians out before you get your military out, but no, we did the other way around. I mean, there's just so many hilarious but pitiful and terribly sad mistakes that were made with Afghanistan for the whole world to see. Right now, looking at Biden and his foreign policy group, if I were Xi and I'm saying this is the peak of my power, if I can make that move without assured destruction, then I might go for it. I don't know how his calculus works, but it's feeling like things could get more kinetic or hot war type situation around this time. Last thing, I think the most likely time would be just after the Beijing Olympics. So we're looking at next year. End of next year.
So you think then that after China looks good in front of the entire globe with the Olympics, then they'll do their invasion of Taiwan potentially?
Potentially. So if they have the cojones to do that, I think it wouldn't happen until after the Beijing Olympics.
That's interesting. We'll have to check back after the Olympics and see if your prediction becomes accurate. So as we wrap up this interview, one last question here. So if the Evergrande situation, if the other Chinese real estate developers, they default rapidly and we have wide scale, what type of impact is this going to have on global stock markets, on foreign banks? Is the Chinese government just going to print the money? Is there just going to be, where Kyle Bass has talked about this, where they just manipulate the foreign exchange rate, the yuan against the dollar, the yuan against the euro, make sure the foreign exchange rate doesn't go crazy so the People's Bank of China maintains the foreign exchange rate or keeps it in a range. Internally inside China, trillions of quantitative easing and bailouts are printed. So that would create really horrible stagflation, even worse than has already been happening in the last 12 to 18 months. It would cause, higher manufacturing costs, higher food and energy prices.
That doesn't seem do you think that would work? I mean, think about it. If they did that,
well, I think it would create even more protests.
Yeah, I mean, so I guess so. If they go with their policy of just making people disappear and that works, and they can do that, then sure, maybe. But I don't think that would work because you can mess with your exchange rate, but then your problems with importing all these things that you need, like energy and commodities and everything else that makes your whole economy and world go round, gets even more difficult. It becomes even an even greater problem. So I don't know that that's a solution.
So you don't think then that China can start widespread contagion similar to the US in 2008 where it causes everything else to crash then?
Well, so the US in 2008, other banks had direct counterparty exposure with US banks. And so in this case, US banks they've been prevented, they don't have direct exposure with Chinese banks. So Chinese state-owned banks, we don't have derivatives contracts that people don't know what the notional amounts are. And that was a whole huge disaster with us and the Europeans. That doesn't exist in this situation. So the US banks should be okay. Contagion, I don't think it's going to be held within China. China obviously has a huge impact on Brazil, Canada, Australia, New Zealand, and it all has trickle down effects to everybody. But I think in the United States, how much of an impact that it would have if we decoupled completely from China. If 2% of GDP is an estimate that I've heard, say we lost 2% of GDP. I'm okay with that. I'm okay with it. I think the US is the best place to be. For sure. I think it would have contagion effects elsewhere, but I think that would hurt most in South Korea and mostly Southeast Asia.
Yeah, we've had a really wild ride in commodities the last 18 months. Gold and silver have not performed very well. I think they're manipulated here in the United States in US dollars. But all the other commodity prices, food, energy, base metals, just an explosion. There's been a correction a little recently in some base metal prices when China puts on draconian policies. There's been some really weird draconian policies since May, really, out of China, trying to restrict the amount. They said for speculation for base metals. But do you think then that there could be a commodities bust, or do you expect a commodities bull market maybe after some more corrections to continue?
So I expect for energy, I think energy is going higher for a while. It's going up past 100. In terms of other commodities,
that's oil. That's oil prices. So that's
oil. Yeah, exactly. And then in terms of other commodities, China still needs a lot of them, but if it's going to be forced to shut factories and buy less, then, I can't say the same for the whole commodity complex, but energy, certainly there's been so much under allocation because of these green, the people who think they control the world and they can centralize,
ESG, the Davos crowd.
Yeah, the ESG Davos. John Kerry posted a thing on LinkedIn saying that emerging markets could go without any oil and they'd be fine. And I'm like, really? Without any hydrocarbon base? And I'm like, really? That's just hilarious. I would love to see what they have to say about that.
Well, they fly around on private jets and their yachts and all this. They're such hypocrites.
Yeah, but emerging markets, they rely on hydrocarbon-based fuel. They're not over there sitting there with their wind fuel that they can be, they're expensive forms of energy. And it's a joke. And so there's been a lot of malinvestment and underinvestment in conventional hydrocarbon-based energy. It takes years to fix that. So I think you're going to see a period of at least a few years where energy prices are high, and that's also going to push higher on inflation.
Yeah, because so much oil and natural gas, whether it's plastics, not just transportation costs, you have all these input costs that are plastic derivatives. Yeah, to make food, to make plastics, all these fertilizer. Exactly. Well, you have fertilizer plants in Europe that have shut down because the natural gas price went so high.
Yeah, so it's going to be interesting. So that's for sure. But we also have to consider, I don't want to be labeled an inflationista because I definitely think in the longer term, when you've got a globe full of debt. I mean, it's not only China. The U.S. is nothing like China. China's problem is far larger, but we all are saddled with debt, and that in the end leads to a more deflationary, like debt-driven deflationary situation. But in the shorter term or medium term, supply problems and malinvestment is likely to cause a period of supply-driven inflation.
Well, we're going to have to agree to disagree on that, because historically, like most governments, they do currency revaluation, or they print money to deal with debt. So they don't just normally default unless they're an emerging market.
So I was talking about the United States. So I'm talking about the world's reserve currency. In debt deflations, if it's global and if the globe is saddled with debt, you have to either have a combined and completely coordinated reset where everybody just agrees to say, we're just going to erase the debt, or you have like collapses all over the place that are little pockets that blow up as people can't repay their debt. And then, or you could see also that being part of an attack against the US dollar as a reserve currency, because a lot of people owe money in US dollars that they can't afford to repay. And so we'll see. But you're an inflationist. I'm a nuanced inflationist.
I'm more of a stagflationist. I'm not really in the hyperinflation camp, not yet, because we don't have velocity of money. So unless we have velocity,
that's the point. Point.
But the US, so you can't really have hyperinflation without velocity of money, but you can have stagflation because all these other governments are all trying to devalue their currencies. They're all doing beggar thy neighbor policies. And the US, what worries me is the US has to import so much. The US imports so many things. And so the US is importing all these other stagflation and shrinkflation. So a lot of US imported goods are experiencing higher input costs and lower quality.
And here's the thing, though, we don't have to. I mean, the United States is if you were an alien coming to Earth and had to pick one country to be on, which one would you pick? Because I certainly know my answer. We've got arable land, and we haven't mismanaged it like the Chinese have. So we can we can grow our own food. We have energy resources. We could be energy independent if we invested properly. For a time, we are reliant in importing a ton from the rest of the world, but it doesn't have to be that way forever.
Yeah, and California could have the best economy in the world if it wasn't a mess with politicians and bureaucrats. Instead, they've made a mess of things with taxes, rules, regulations, and now all their productive private sector businesses are leaving the state.
Leaving, exactly. Oh man, I mean, the mismanagement of California is beyond like understandable. Like it's like insane.
I grew up in California, so I know. I've heard stories from friends, but yeah, it's a mess.
Total mess. Yeah. Well, I won't keep you too much longer, but I really enjoyed the chat and look forward to talking to you again soon.
So if my listeners want to pay more attention to your work, how did they do so?
They can follow me on Twitter at Emma. So it's EMMA_CFA. And they can reach out if they want to send me a Twitter message. I'm slow to respond, but I will eventually get back to them.
Okay, great. Well, thank you for your time. I really appreciate it. And I think my listeners are going to get a lot out of this.
Okay, great. Thanks, Jason.